Good evening, everybody. Welcome to Zoom at 8. My name is Julianne Peterson, and I am your host every Tuesday night. Now, I am also a loan officer, senior director at Old Capital, and we have been doing business in commercial real estate for 38 years. Myself, I've been in real estate for 34 years. I know I only look 29 to you, but listen, what that means to you is that I am a great resource. I'm in the trenches with you. I do deals as a general partner, as a limited partner, as a lender, as a capital raiser. So a great resource and as a sponsor. All right. So I have lots and lots to offer, but we're looking to build our business with you as doing loans primarily. So if you're looking at a deal and you're ready to put in an LOI, stop yourself. Use a lot of forced, not send it in, and send it over to me. I want to make sure that you're not overpaying. That would be a very bad deal. So we're going to need the T12 rent roll, offering memorandum, and your underwriting. And realistically, you're going to want, before you send that to me, you're going to jump on the phone with JT Lynch, who's in the house. That's your insurance broker. We're going to know more about that here shortly. You're going to go to your taxing assessor's office, say, what's going to happen if I buy this at 10 million? They're going to tell you, they're going to instruct you. There might even be some software that you can work on. And then you're going to go to a property manager. If this is a serious deal, we want to make sure that you've got everything aligned, then jump over to me, and then I will feed you back the underwriting that we've done. We'll give you some questions, answers, some notes, and the quote. Now, this, you have to understand that the lending environment today is a lot different than it was 2-3 years ago, where a loan quote would last weeks, maybe even months. Now it is changing on a daily basis. That's your treasuries, and they are uncertain at the moment. So make sure that if you are working with a lender, you don't have to go out and shop it, okay? That is not how we do business in commercial. You find a partner, just like JT, you find a partner and you do business with them. Remember, you're not going to go shop for the best plastic surgeon, right? Who has the best price. You're going to look who has the business, who has a track record, right? That's really who you want to engage with. All right, so that's the loan side. If you are coming for the first time, make sure you're putting everybody else in the room, put your information in the chat, because this is like going to a conference. If you're looking at the best ever conference, it is like going to be about $1,400. It's expensive. This is free. And you can meet all of your partners here where you can do business. We can find investors, you can find lenders, you can find your insurance broker, cost segregation, attorneys, they're all here. So make it a commitment and get on the phone and make and build these relationships. All right. Tonight is a dear friend of mine. And a friend, you love doing business with the people you know, like, and trust, and then they become your friends. And that's when this industry becomes great. Because you really want to you want to have fun doing what you love. And that's what I do with JT Lynch. We have been doing business, I think, 6 years now.
Yeah.
And become obviously a friend, and all of my business, all of my insurance business goes to JT Lynch. And I know that all of JT's lending goes to me. It's so amazing how that works. But if you don't know JT Lynch, he is a commercial insurance broker with Ramey King Insurance. As a broker, JT works with multiple carriers to find the best coverage at the lowest premium while meeting lender requirements. Ramey King has specialized in multifamily insurance for over 35 years. However, they've been insuring for over 100 years, and they are licensed nationwide. As a multifamily specialist, JT can help insure a wide variety of assets, in challenging situations and locations. As a real estate investor, he understands the crucial role insurance has in the operations of multifamily properties. He is located in the great state of Texas, has 2 kids, and is married to a lovely wife. And he is here once again. I think you've been here 2, 3, 4 years. It's been
Yeah,
amazing. So I
yeah.
want to welcome you back and
Thank you.
make sure that everybody in the house knows you. How are you tonight?
I'm doing great, doing great. Happy to be here as always. For those that know me, no, I didn't lose a bet. No, it's not bald October. Or my son asked me, "Are you sick?" No, I'm not sick. I was just tired of fighting genetics, and it was time. So here we are.
So
So
typically JT has a head of hair, but he said, I'm done with that. So he's
yeah,
trying to keep up
was
with G over there.
yeah, yes. He
Yeah,
looked so good. I was like, you know what? Let's just go for it.
it
So
is. It is a good thing. So you're in Dallas, you're in the MSA. You guys are writing a lot of business in multifamily and you do other asset classes. In fact, I have my insurance, my house and my car through Ramey King.
right.
So that speaks volumes where, I just what makes you different is that you respond as quick as I can drop a pin. You
I
are amazing.
remember.
And that's what you can say that again, right? Daryl, this guy, JT, who trained you? You are amazing.
It's kind of but thank you for saying so, but it's kind of a pet peeve of mine to wait on somebody else. So I don't know. I just always been that way. Just get back to someone, even if it's a text and you can't reply right away. I'll reply. I'll get back to you in a little bit, and then I'll move the text over to unread so I don't forget it. And I don't know. It's just something I hate when I'm waiting on somebody. So
Yeah.
I guess that's
Well, I feel so lucky that I found you and that our business together has just blossomed like crazy. And I just feel so proud to be able to say, I know that JT is every time is going to respond in the same manner. So it's
likewise.
awesome.
Likewise.
So,
And
so
I'm working on ground up construction for self-storage, and I'm going to need a loan here soon. So I will be letting you know.
I love that. I love that opportunity. Now, you are not the most popular guy in the room when it comes to underwriting. And
No.
so we have a couple years ago, I think it was, we had one of your underwriters. I think that's what you call them, or the people that you do. What do you call those guys?
Yeah, he's an MGA. So he's someone that I reach out to reach out to even more markets. So there's some
Okay.
carriers that you can only reach through an MGA. So he's kind of my middleman, but he also does a whole lot of underwriting and helps me kind of understand what carriers are looking for. So yeah.
So you brought him in
Mhm.
and actually, he and you, both of you guys, so you're both responsible. You said the rates are going to go down, and they did.
Mhm.
I was surprised. Nobody believed me. I said, go to the video. These guys told me it's going to go down. So can you
Not
walk us
everywhere. I
through?
will I will say not everywhere, but yeah, for the most part, yeah, it seems like things are starting to level off for sure.
So we experienced that probably over the last year, especially on our assets, that they did come down or they didn't go up as much. But in markets, we talk a lot about the markets in the Midwest where, Iowa, we've got John who's, he's bullish on Iowa, on Des Moines. I probably shouldn't say that because he'll probably want nobody else to come into the state because he's going to
Sure.
take care of it all. But, um, where are those markets in the Midwest that are not experiencing increases? I just ran a deal, I think it was in Cincinnati, and it had gone up considerably. I also
Really.
ran another one in Lexington, and it went up considerably.
Yeah.
So, can you walk us through that?
Sure. I mean, the easiest answer is anywhere where there's not going to be huge catastrophic losses. So anywhere that's not along the coast. So think of somewhere like Phoenix, where just they have some thunderstorms, and that's kind of about it, right? They don't have large hailstorms. There's no hurricane problems. I'm sure they have a tornado here and there, but really there's not much that happens there, right? So it's not unlikely to see a roof that's 20 years old there and it looks great. There's just not much that
Mhm.
happens there. So that's the first thing I would think of. Um, we see pretty good rates, Tennessee, Carolinas, inland Carolinas, Georgia, things like that. As you get farther up north, you'll see a lot of older properties. And when I say older, I'm talking like, oh, it was built in 1908 type of thing.
Yeah.
Then it can get a little rough. But yeah, usually right in the Midwest, I mean, it's the rates are great. Very competitive for us, actually. You'll see a lot of the smaller agencies have products that work. You'll see, I've seen a lot of smaller apartment complexes in that area as well, and I think that's part of why it's a little bit more competitive. But yeah, I mean, really, location as far as the storms go, that's where you want to think.
So here's the thing. If you guys are not targeting markets, you need to target markets. You need to have one, two, maybe three, but you really can't become the best uh, vision of yourself or version of yourself if you've got more than three and maybe even two. You really want to dig deep with all of your vendors there, your construction, your plumbing, your electrical, your roofers, all of those. If you are going into more than two markets, you really are going to struggle. So be thinking about the Midwest right now. But listen, the demands and the supply and demand issues that we're seeing in some of these markets, like Phoenix, it's going to take a while.
Yeah.
Like in Austin, it's going to take a while for those to be absorbed, even though they've got good migration. They're just building so much. So be aware and maybe take a tour out to the Midwest. I highly recommend it. And this is a reason why solely is on the insurance issue. So let's,
Great advice for sure. It's kind of like the person that can do everything so that they're a master of none, right? So yeah,
yeah,
make sure you're specialized. There was a group of guys I saw last weekend. They're all wearing Detroit Lions gear because they were going to the Cowboys game here, but then they also wanted to go to the State Fair of Texas. And I said, hey,
yes.
you're going to have a blast. Just know that it is South Dallas. That area isn't the greatest, so just you'll be fine. Just make sure you're not walking down random streets at night. And they go, oh, we had no idea. Well, of course they don't have any idea because they're in Detroit, right? So if you're investing somewhere, make sure that you
Mhm.
know everything about it, because that's one, I mean, it'll be your first big, huge mistake.
Great suggestion. Now, I am a broker. I call ourselves really bankers because you go to the bank to get money. You go to an insurance broker because you want to be able to open up your trench coat and be able to be given lots of options with a brokerage firm. You are not doing this maybe full time, whereby you're going to need somebody who's going to help you. We've got JT Lynch is the professional in the room. He can provide you what you need. So, can you walk us through, kind of help us understand how does a brokerage in insurance, how does it work?
Yeah.
Because it's very similar to multifamily lending. So, I'd
Mhm.
love to for you to make sure everybody understands how
Sure.
it is from a
Yeah.
broker insurance brokerage.
Sure. So you've got a property under contract. You need insurance on it, right? So what I'll do, based on my underwriting and what I know about the property, send out basically applications to all the carriers that I know would have an interest in it. Now, G might say, well, did you send it to everybody? Well, no, I didn't send it to everybody because I know it's just like buying a Thanksgiving turkey and your wife's going, was this the best price you got? Did you go everywhere? Well, I didn't go to 7-Eleven because I know they don't sell turkeys, right? So did you go to this carrier? Well, no, because I've gone to them before and they keep telling me I only want 1990 or newer. And so we have relationships with them too. If I keep just sending them everything, they'll go, you know what? Boy who called wolf, I'm just going to stop answering everything you send. So we know the carrier's appetites, we know what they're looking for, and we'll send it to all the carriers that would be willing to quote. The problem is if you have another broker that comes in and, oh, let me look at it. Well, it really muddies the water because that broker may go to the same markets that I'm going to, and it's whoever comes first gets the quote. Um, and as you know, it's so hard to find the right policies. A lot of the times, the best option is carrier A for the property coverage, carrier B for general liability, maybe carrier C for the umbrella. If you need flood, that's a different carrier. Um, but if you blocked those best options from me and I only have carrier A and then E and F, well, it hurts you
Mm.
actually, right? Because the best option was A, B, and C, and you just blocked us from it. So, and I've seen in the past before that carriers go, I've gotten multiple submissions on this. All the
Mhm.
applications are different. You know what? I'm not going to quote this one. Good luck. Good luck with the closing. I'll move on to the next one. They just don't want to even get into it. So the correct answer is find a broker that you know and trust that is a specialist, that they do this all day long. Let them do the shopping for you. If you really just can't grasp the idea of letting someone else do the work, what I would say is let me go shopping for you. Give me 2 weeks, 2 or 3 weeks to go out to all the markets that I think will work. Um, I'll send you a list of where I went, then approach that other broker and go, hey, he already went all these places. Do you have anything that maybe he missed? That would be the best way to actually shop it if you had to shop it yourself, right? Um,
So let me
and
let
I
me
would
just add,
appreciate it. Yeah, if you
yeah.
came to me and said, I've got another broker working, I
Mhm.
think that maybe you can do a better job. I saw you on Julie's Zoom at 8 and you're so awesome. I just wanted to have you take a look at it. I would say help me by giving me a list of all the places he already went so I don't waste time. And yeah, sure enough, there's a market that I can approach that I've been doing this so long, they probably just don't have access to it. So
That is a great information. And what I always think about is you have been there, your company has been doing business with these companies. And so these companies want to do business with you.
yeah,
And then and you have maybe a volume discount of some sort, or you've got that relationship.
sometimes, yeah,
So they might give you a little bit better pricing, but now you've muddied the waters with another broker, and then they are using the same company that you've gone to. And so while you've locked them out, this other company might not get the same pricing. So
yeah,
it's really, really critical. And that's kind of how the mortgage brokerage works. But we do more than that. Again, the way that we respond and JT responds on his own is amazing. So it may be a little bit more expensive, but you know that he's going to be there for you, right?
sure. And really in a perfect world, if I approach carrier A, and you're right, we have relationships with them. There's some negotiation. We've been working with them so long. They know that the information we're giving is factual. The roof was replaced in 2021. It's not a brand new roof, right? So we're giving them factual information. They appreciate that. They trust us. There are times where we can negotiate a little more with them, but in reality, if you're going to carrier A, you should probably get the same rate and all that as somebody else anyways. So it doesn't make sense to have multiple people doing the same thing. We're going to the same carriers.
Yeah.
Or
Okay. Let's beat that dead horse.
yeah,
All right. Next one. I can carry bank, bridge, agency,
okay.
CMBS, and Lifeco. These are all the loans that we have. When you go to a to get insurance on these deals, you need to make sure you explain to the JT or your insurance broker what kind of debt you're going to be putting on that. So talk to us about that.
Yeah, so the different loans are going to have different insurance requirements. So if you're getting an agency loan, Fannie and Freddie, they want these particular items in that coverage. Most of the deals that we do are agency loans or they're loans that are very
Mhm.
similar. So a lot of the products that we're shopping for are going to include all those anyways. I really don't get too many clients that say, I just got a loan from a local bank out here in Sanger, Texas, and they just want me to cover the loan amount. That doesn't happen too often.
Mhm.
But if it did, then there'd be lesser requirements. I'm going to have you if you don't want those requirements. I mean, the reason that Freddie and Fannie want those requirements is because they're pretty important and they're going to cover you. But if you really don't want those certain things to save a little bit more money on premium, we can find that product for you. I would also have you sign a couple more documents, so saying that, hey, don't hold us responsible for a product that may not be have as good a coverage, right? But I mean, we can
Mm.
find it for you. But absolutely, let me know right off the bat, and I'll send you a questionnaire of certain things that I'm looking for. And one of them is what type of loan are you getting? Yeah.
Yeah, and here's the thing, guys. Yes, your insurance will be less expensive if you're doing a bank loan. Their requirements are not as high. And here's why. When you go to an agency, that is a government entity loan. So they're going to protect their money. Paid your taxes, you spent a lot of money. They're holding it, they're in charge of it, and they're going to make sure that they don't lose that asset
Oh
in
yeah,
any way.
that's their
So
property until you pay it off. That's how
exactly.
they look at it. And
Yeah.
these lenders they're brutal, and for a good reason, because they want to make sure that all the I's are dotted, T's are crossed, that everything's correct on the policy, and we appreciate that because they really keep us in check, making sure that everything's correct. But yeah, they dictate a lot. I mean, the loss of rents coverage, they're going to tell us how much they want. The replacement cost amount, they're going to suggest a
Mhm.
certain amount. And we'll
So I
talk
got
about
to,
it a little bit
I,
later. But yeah,
I do have a question. Have you ever figured out on the same loan, sorry, on the same asset, if you were to put a bank loan or agency, what the difference is in those policies cost wise? This is a great
um,
question.
I'll go through an activity here to show you
Okay.
what a possible difference is. But yeah, it could be dramatic. But a lot of these bank loans too are going to have similar type requirements. There's really not many that I've seen that they're just like, yeah, they just said to get insurance, just whatever, So
Yeah.
um the, I think the difference would be higher replacement cost values, higher loss of rents, and some of those bigger ticket items that are in the policy that really
So
drive. But
you
yeah.
don't see like a 10% difference or 5%,
Oh
anything
yeah,
like
it
you
could definitely be 10. Yeah, yeah.
10?
Be
Okay.
higher than
Okay.
that. It depends.
Okay.
Well, and there's some lenders, man, there's one, I don't know if I should say their name, but very difficult to work for. I didn't even know they
Mm.
lent for multifamily. Um, we went to several carriers. They just didn't like the carrier. No, I don't like that. Go find another
Hmm.
one. And when you're talking about having to find a whole different place to go, well, I mean, yeah, it made a huge difference. It was $100,000 difference or something crazy like that. So yeah,
Oh,
it
wow.
could be
Okay.
extremely significant. Um,
Okay.
so yeah.
All right. What else do you want to tell us about insurance that's just going to blow our skirts up?
Well, good question. So let me grab the screen. How do I share here? So I'm just gonna go through this slideshow. I know y'all love slideshows, especially from the insurance guy. Um, but these are
It
kind of
keeps us
the
up at night. Keeps us
Yeah,
up at
right.
night thinking about
So
it.
these are
Yes.
kind of some of the trends that we're seeing right now. So what I'm going to go through is how the lender can affect insurance premiums. We're seeing a lot of higher replacement costs,
Hold
higher
on.
deductibles, and more
Ho-
exclusions.
Are
Yes.
you showing us something? Because we don't see it.
Oh, how come you can't see it?
We see your bald head.
How come you can't see it?
You shared the wrong screen. Well, you haven't even shared anything. So,
Oh, um,
I see baby pictures.
baby pictures.
oh, you do not.
Oh, that's my screen. Never mind.
There,
Okay.
something's coming.
Can we
There you
see
go.
that now? All right.
Yeah, you want to open that up? Yeah.
All
Great.
right. Okay.
Uh, can you open that up on the bottom? It should say screen, the presentation screen at the bottom.
At the bottom of the
Yeah, go to the bottom right. Yeah,
um
wait. I see you getting close and then you go away. So down by 744 on your clock,
mhm.
right? Now go to the left. Right? Looks like a screen that you pull down. Oh,
Right.
you just, no, right there. Boom.
So, but I've got it already on another screen.
Oh, well, then you need to switch it.
Hold on. This is dumb. All right, here we go.
Da,
Better?
da, da, da. It's not there.
Perfect.
Yep, now it is. And it says,
Okay.
why would your loan lender factor into insurance premium?
Right, exactly. So, here is if you've ever gotten an indication from me, this is an estimate that you would get from me on future insurance premiums for a possible property that you're going to submit an LOI on. We all know these different items. We've got deductibles here. These items right in here, what Fannie and Freddie are going to look for. This is your general liability limits. So a lot of this is kind of standard. Um, I just know that, hey, you're looking for a property in DFW. These are going to be your deductibles most likely, right? I check the flood zone. It's not in a flood zone. So I determined the total insured value, right, at 19 million. And that you're probably based on the number of units that the lender's probably going to ask you for a $5 million umbrella. Well, this total insured value was at a replacement cost of, I probably used $105 a square foot because that's the lowest most carriers will go, and a lot of lenders do accept that. But what if your lender says, no, we need a higher replacement cost value. We need to have a higher business interruption. Oh, and that umbrella, it's got to be higher than $5 million, right? So can you see this
Yep,
spreadsheet? Yeah.
yep.
All right. So how many units, Julie, for this property?
100 units.
100 units. What's the square footage?
I don't know, 20,000.
20,000. It's a small,
Those are
small.
tiny,
So,
tiny
so
units.
you see how, I underwrote at $105 a square foot. We'll put in there $25,000 for contents. How much are these? Is $1 million for business interruption?
Sure.
Sure. So general liability is about $100.
10,000.
Yeah. And then
Okay.
your umbrella is about $30 times the number of units. So, but if they come in
Oh,
here and go, well, we would actually prefer the replacement cost to be $150 a square foot. That's what we think it should be to replace it in the event of a total loss, a fire, right? So
mm-hmm.
look how it changes on the premium, right?
Mm.
And we think that you'll probably make a lot more rents. We want to make sure that that's covered. Now all of a sudden you've
Doubled.
changed it tremendously. And a lot of times I won't get these deal specific. You'll send me requirements, Fannie and Freddie, just general requirements. Well, I know that. I already had those line items on there. I don't know the deal specific requirements, and sometimes I don't get them until a few weeks out of closing. Now, I will
Mm-hmm.
guess as much as I can. I'll keep bugging the lender for these deal specific requirements, but I won't know until the end. So a lot of it is up in the air, and it's up to the lender. Now, I will say, I know that this is pretty high for DFW. I will use my own replacement cost estimator tools to show them that, hey, first of all, the carrier is okay with insuring it for $105 a square foot. This replacement cost estimator tool that I used says it's $110 a square foot to replace it. Please go back to the lender and see if we can get a waiver on that. And I do this all the time. That's what makes a specialist like us a lot different than just somebody else, because we're willing to work with the lender, show them proof of
Mm.
that we can get that the replacement cost doesn't have to be that high, right? And so maybe they meet us in the middle, $115 a square foot. Now
Mm.
we saved you a whole lot of money. I always give a price range. There's always taxes and fees and stuff in there, and just a little bit of wiggle room. But yeah, there's the total annual premium right there. Our price per door. We know that the seller is paying this much, so it's at a 73-cent rate. So there's more into this formula that I'm not going to show y'all, but yeah, you can see how the
So
lender.
you're negotiating behind the scenes
Oh
for
yeah,
the clients. Okay, that's good
absolutely,
to know.
absolutely.
It's not like going to the grocery store where here it is. There is
No,
some
no, no.
negotiating. Good to know.
If a lender is asking something ridiculous for replacement costs, the lender analysts, they're just trying to check boxes. The
Hmm.
policy needs to state this. I need to check the box that it does state that. And yeah, we'll push back and go, no, no, that's ridiculous. That's ridiculous. It needs to be this, or can we have it this? Please go back and ask. Here's providing evidence that my replacement cost estimator tool said it's this. A lot of times they don't care. As long as I have evidence to bring, then cool. I'll bring it and do what I can to help lower the premiums for you. And we'll
Okay,
also
let's
show
talk about.
them at your replacement costs, it's $55,000 for premium. If we lower it to this, it'll be 46. Let's help our client. Let's get this closed. Everyone wants it closed. That sounds good to me. I'll go back to the lender and ask. So.
All right, and you give this range. I know that we've talked about this in the past, but there's a lot of new people here.
Yeah.
What is you typically are about what, 5,000 away from where it lands, as I
Yeah.
recall.
And like I said, there's some taxes and fees in there that, it's just hard to estimate exactly. I want to put in some wiggle room there. If you're underwriting, I would say always use this higher number, just to be more conservative.
Hmm.
But yeah, that's why I try to put in a range. Also know that it could definitely be less as well. So it's just playing with the numbers a little bit and just trying to get as close as we can.
Okay, let's talk about claims. Do you have something you're going to talk to us about claims?
Well, let me get to this first.
Okay,
Or this.
we got about 10 minutes left.
All right. So I want to go over deductibles real quick because a lot of people get these confused. So there's really three basic deductibles. There's all other perils or AOP deductible. It's any claim that arises from damage to the physical property other than wind or hail. So, John, a car runs into the property. What type of deductible is that? That's all other perils. What if a tree falls onto the property? Well, what caused the tree to fall? Was it wind? Okay, then that's a wind deductible. Usually this deductible is 5,000. I've seen it as high as 500,000. If it's that high, that means there was a recent fire on the property, a $6 million loss. Your lender's not going to accept this high of a deductible. We're going to have to get a deductible buy down for that to buy it down to make it lender compatible. Your wind hail deductible is any claim that arises from a storm that had wind or hail in it, right? Usually you'll see that from 1 to 10% of the total insured property value. And then there's a named storm deductible. John, you guessed it. Any storm that's big enough to have a name, that's a named storm, right? So you'll see that on the coast with hurricanes or big tropical storms, right? So what is TIV, the total insured value? How do I even calculate my deductible? So here's a proposal that we did recently. It's a 184 unit complex in DFW. It's a 1972 vintage. You can see the all other perils deductible is $25,000. The building, I think this is at $105 a square foot. That was the limit. You do the limit plus the loss of rents plus the contents coverage, and this is your total insured value. Okay. So John, if you're thinking, oh, 4%, that doesn't sound bad. I can do that. Well, can you? 4% of that total insured value, that's how much your deductible is in the event of a hail claim on your roof. So these people that tell me when I ask them, how old is the roof on this beautiful brand new property you're about to purchase? And they say, I have no idea. Well, you might be about to pay that much money tomorrow after you close if a storm comes through. Can you do that? Right? And if you can, awesome. Just know that that's what you're getting into. If you wanted to get a lower deductible, say 3% or 2%, those are the differences, right?
Now the lender's going to determine that, what your deductible is?
The lender in most cases right now are accepting 4% deductibles, but sometimes we see high deductibles and they'll go, no, that's too high. You got to get it down. So we'll either, in this next slide here. So there's a few different ways we can negotiate with the carrier, try to get that down. We can find a different carrier, or we can purchase a deductible buy down policy. And that's with a whole different carrier, and it's actually a whole different policy. This property here, I just got this buy down this week. The insured value is $19 million. He had an expiring wind hail deductible at 2%. At renewal, they offered 3%. So you can see it's a $200,000 difference in that deductible. I went out and got him a buy down from 3% to 2%, and it cost him $15,000. So you got to ask yourself, John, is it worth it to pay $15,000 now so I don't have to possibly pay $200,000 more later on, right? That's really what you have to think. I would say be smart about it. My personal home, I got a brand new roof this year. Do I necessarily care about a lower wind hail deductible for my roof this year? Probably not. I have a brand new roof, right? If my roof was pretty old, man, I need to think about getting a lower deductible now, because the next hailstorm that comes through, yeah, I'm probably going to need a new roof. So be smart about it. Here is the next thing that we want to get into. We're seeing in high crime areas, or if you have a property with bad wiring and bad breakers, even the general liabilities don't want to have anything to do with it, really. So we see a lot of these now. Total animal exclusion, total firearms exclusion. Now, that doesn't mean that no animals can be at your property. That doesn't mean that Julie has to go door to door and make sure people don't have guns. I would advise not to do that. But what it means is if there is a claim that arises because of one of these issues, and it could be from an animal that isn't even a tenant at the property, it could be a stray dog, right? If you're sued because of those things and you're brought into a lawsuit, the general liability carrier will not defend you, right? And you'll also see down here assault, battery, abuse, or molestation. Those are big ticket items that we're seeing too. So John's going, well, what do you mean? Should I kick out all the animals on my property? Should I be there 24/7 to make sure there's not stray dogs? I talked to an attorney, must have been a year ago, and I'm not an attorney, don't quote me, but what he said is you'd have to be brought into a lawsuit from that animal, and really to be held negligent, it would have to be multiple complaints over a certain amount of time that, hey, this dog is a problem, and you and your property management company didn't do anything about it, and then the dog went and bit a little girl, right? So if this exclusion is on your property, any of these, it's not the end of the world. Just know that you got to tighten things up. And I'll always tell you that, hey, these exclusions are not cool. You need to be aware of it and make sure.
Can you come in and say, I know I'm in Dallas. Everybody has a firearm. Can you go to your insurance person and say, I got to get that off of there?
We will try, but a lot of these properties, they'll go, nope, we won't do it. And then they may be the last option that there is, and it may be the only option. And we've had people go, look, I'm willing to pay whatever to get it removed. And they'll still say, sorry, no, doesn't matter.
Oh,
and most of the time, honestly, this isn't from people that are, licensed gun owners. It's gang activity. It's bad activity around the neighborhood, that you'll see things like this, right?
Okay.
So just know what you're getting into. Make sure that you know the area. Do a quick Google search of the address. You'll be surprised how many homicides and robberies and things will pop up just by a Google search of the address. It's pretty simple to do. Just know what you're getting into and know that these exclusions we see it very often now. It's something we try to combat as much as we can, but some of these properties, we just, it's hard to get them off. Here's something. So assault and battery sublimit. So it's not an exclusion necessarily, but it's sublimited. And what that means is your general liability policy has $1 million worth of coverage and a $2 million aggregate, meaning I can get sued for $1 million. I'm covered. That can only happen 2 times in 1 year. That's your aggregate, $2 million. So you're not completely excluded, but they'll cover you for up to $25,000 per occurrence or $50,000 aggregate or for the year. So you do have some coverage there, but it's not completely excluded. It's not the full $1 million. We don't like to see it, but at least you have some sort of coverage, right? That's the next thing. So how do you make sure you have the best option? know your market, know what you're getting into.
Mm.
If you're buying anywhere around Atlanta, it's all a high crime area. I promise you, it's all high crime. It's the craziest thing I've ever seen. That doesn't mean
Mm.
don't buy there. It just means know what you're getting into. Underwrite appropriately. Be prepared for these higher deductibles. Be prepared for possibly buying a deductible buy down. Know your policy. Ask your broker what's going on with the policy. And make sure they're a specialist in multifamily insurance. If you've got your brother-in-law trying to do this for you, do they know all of these things in the policy? I mean, the policy is 19 pages of legal jargon. Do they know all the ins and outs of it? Probably not. And of course, here's our plug. We've specialized for over 35 years. We're licensed nationwide. Happy to help everybody with their upcoming renewal or potential LOI that you want to submit, just like what Julie wants, rent roll, T12, and the OM, and then happy to help.
Okay, so let's talk about claims. A lot
Yeah.
of people are concerned that they don't want to put in a claim because it's going to cost them next year, or it's going to put a stain on, the ownership and
Mhm.
some way. And therefore, you've got 2 years to file the claim and you get out, but the new owner is going to get a strike against them.
Yeah.
So how do you manage that? I mean, is it
So the
the
claim
cost
follows
benefits?
the claim follows the property and not the owner.
Yeah.
Okay. So what the carriers are thinking is this a lemon property? Is that fire that occurred last year due to faulty wiring, is that going to happen again? And each claim is
Mm.
different. Is the fire from a lightning strike or is it from bad wiring, right? Is it from arson or is it just a kitchen fire, right? So those types of claims are differently and they'll underwrite them differently too. Was it purely an accident or something that is probably going to happen again in the future? So they stick with the property. The biggest thing that I would suggest is you've seen these deductibles and how high they are. Don't be quick to say, "Oh my God, there's a kitchen fire. I've got to make a claim." Well, hold on. Your
Mhm,
deductible is
mhm.
$25,000. I know it looks like a bomb went off, but could you fix it for 30? Because then let's not make a claim. You're only going to net 5 grand, and then you're right. It's on your loss history for the next 5 years. So why do that? For
Do you have
those
a
that
recommendation on that? Like, what is it? What makes sense? Is there a certain percentage that over it? Is it double? When do you
I,
say this makes sense?
I think it really depends on the ownership group, how much
Mm.
liquidity you have set aside. Maybe you were planning on turning over a certain amount of units anyway. So so it really depends on the group, and kind of your plans for the property. But when I hear people go, "Oh, I don't want to make a claim because it's going to stick with me." Well, but at
Mm.
some point, if you need a new roof, I mean, yeah, it's going to cost you 390 grand deductible, but if it's a $500,000 roof, well, go ahead and do it. You know what I mean? I mean, your insurance might go up, um, I don't know, $10,000 next year, but I mean, come on, you just gained $110,000 in a brand new roof.
Yeah.
And then, after 5 years, it'll completely fall off. But then after three, especially a new roof, a lot of
Mm.
carriers are like, I don't even care anymore. And you have a brand new roof. Awesome.
Yeah.
So
Yeah.
live with that increase for a little bit. We'll shop other carriers too. And yeah, it's really a judgment call, but that's call me. We'll talk you through it.
It would
Pros and
seem to
cons and all
me
that.
like if you're thinking about a market to check in, where is the cheapest place to go? Like,
Yeah.
is it Des Moines? Is it Champaign, Illinois? Is it, Indianapolis? It would be really an interesting, as you're looking at your criteria to pick
Yeah.
up the phone and call you. So, all
Sure.
right, one last question. We've had two hurricanes. We've had a lot of damage on the East Coast and in Florida. What's going to happen? Is that going to be nationwide? Are we all going to be paying for that? Are we going to be paying for the fires? By the way, being in California, we had fires and SDG&E said, well, now you are going to have to pay to fix that. So me as a upper person that just lives here, I don't have any assets. I have to pay for that fix. What's going to happen with the flooding and the
Yeah.
hurricane damage? All of that. What can these
So
people look forward to?
So basically, there's a hurricane in Florida. and John Manfredi's going, why should my rates increase because of some hurricane in Florida? Well, first of all, they're not going to increase near as much as anyone in Florida, right? But the same carriers that are insuring in Florida are also insuring where you are, right? And so they took a big hit. How are they going to get righted? Well, part of the way to do it is through their all their currently insureds. But also, what if you're not even with that same carrier? Well, these carriers have insurance as well. They're called reinsurance, and a lot of them are using the same reinsurance carriers. And so somebody has to eventually pass it down. So the answer is it'll probably go up a little bit, but not near as what we've seen before. What I've been told is now that they've increased replacement costs so much to bring it up to price cost of inflation that that it's going to really help with that. And then they've increased deductibles too. So the people that are making claims now are putting more of their money out of their pocket towards that claim, and so the carriers don't have to pay out as much. So it's not going to hurt as many people. But what's really scary, Julie, is um, the hurricane that affected North Carolina. I was talking to an underwriter the other day, actually Brian, that came on last year. I was like, so what's crazy is these communities were in the mountains. What are the
Yeah.
chances that they had flood insurance in the mountains? And he goes, none, they didn't. And he goes,
Yeah.
what's scarier than that is how do they deem it? Is it a claim based on a named storm? Because they don't have hurricane coverage in the mountains either, I bet. Also, some of the claims that occurred were from mudslides or earth movement. I guarantee you they didn't have earth movement coverage there. And he goes, either way you slice it, yeah, a lot of people are going to be losing a whole lot of money in their house and all that. So very
Just
sad. But
so
how do
sad.
you can't just have everything, I don't have earthquake coverage at my house here in Dallas. It's just kind of one of those gambles, and it's a fluke thing. And that's where hopefully your community, your church, and everybody can help pick you up and pick up the pieces. And it looks like that's happening a lot there. So that's good to hear.
So Hector says, are commercial insurance policies subject to the same emergency assortments as residential policies?
Yes, they will have different emergency funding and things like that, depending on the type of catastrophe that was there. Happened to my house actually during the Texas freezes. They were allotted more leniency to give out a lot of more. So our basically our whole outdoor patio cracked and broke up because of all the ice that was in there.
Yeah,
Abandoned.
right.
Usually they wouldn't consider that a payout, but they're like, no, we've been granted more leniency, and yeah, we'll pay for it. So it's pretty
Interesting. That doesn't happen very often. All right, listen, let's open it up. See if there's anybody in the room with our industry experts. You don't get to sit too often in the same room as JT Lynch and talking about insurance. What is there anybody in the house that has a burning question? All right, I don't want you all to talk at once.
Let me re-ask that question, Julie, if you don't mind, because I think my spell
Sure.
check got me. The worst speller in the world.
Oh, gotcha.
Good to see you. I meant assessments. So a lot of especially here in Florida, citizens can hit you with their own assessments, but what I recently figured out is on the resi side, even if you have a different company and citizens gets into trouble, they can tap into other policies and you could get an emergency assessment up to 10% of your policy.
Yeah. I'm really not sure. Florida is such a different animal. I know that part of the reason that Florida is kind of a nightmare to insure is because of the way the laws are. So you see a lot more storm chasers in Florida. There's a lot more going to court to try to get higher claims and things like that. And what's crazy about Florida is if you go to court and you can prove that the carrier should have paid even $1 more than what they offered you, then the carrier has to pay for your court costs too. So all these attorneys are going, yeah, it's worth it. Let's do it. I'll do it pro bono. If I can get $1 more, you don't have to pay anything. And that's happening constantly, and something that needs to get fixed because all these carriers are going, you know what? I just want to insure in Florida. I don't want to deal with this mess, right? So Florida's hard to answer. I'm sure in areas that get these hurricanes that are so I mean, they've got to have something set in place. I know that they have state funded wind pools and things like that that you can buy from. I heard it's not the greatest thing in the world. I mean, it's government run. So, but yeah, they're doing what they can to help people out.
Do you think that there will be more state-funded insurance companies like Citizens in Florida, or are many of them are pulling out of some of these states
I
with the
think
higher
that,
claims?
yeah, I think that we'll see some more pop up. The problem is, I mean, there's a wind pool in Texas, but they don't cover Harris County, and they only cover these. And it's like, well, all the
Mm,
properties are in Harris County. That's where we need your help. And no, we're not in Harris
mm,
County. So they have all these rules, and then they hit capacity real quick. So they're there to help some. They're real hard to work with. Good luck getting a hold of them. And then they're at capacity and can't even use them. So it's kind of like thanks, but no thanks. You know, you're lucky if you can get it, but it's government run. That's all I gotta say.
yeah. Okay. Anybody else have a question before we wrap it up? If somebody wanted to get a hold of you because they don't know you, you're brand new to them. I see your email there. I see your phone number. So that's very clear. I really love the way you've done that. Would you recommend somebody call you and get to know you first, or should we wait until we have a deal?
What
What's the
I would
recommendation?
say, yeah, very good question. What I would say is, you can call me, sure. I prefer an email first, just because a lot of
Mm,
times I'm running around. I do have little kids. I'm my
mm,
son's football coach, so there's a lot of and we do a lot of events too. So
mhm.
especially if I see a number that I don't know, probably not going to answer it. Just leave me a message and I'll get back to you. But also, if it's something quick, just send me an email and then yeah, I'll get back to you. Usually a little quicker if I'm take a break at football or whatever. But yeah, send me an email. Um, and then yeah, if you want to chat about future deals you have going on or stuff you're looking for or questions, happy to do that as well. So either's fine.
Excellent. Well, I think you've been so insightful to all of our investors here tonight and the people that listen in the future. I appreciate all the insight that you've given to us tonight.